All right, let's talk about something we use literally every single day, but almost never really think about. Something so fundamental to our lives that we just take it for granted. Yep, we're talking about money.
I mean, think about it. You've got it in your pocket, or more likely, as a number on an app. You work hard for it, you spend it on things you need and want. But what actually gives that little piece of paper or that digital blip on a screen all of its power? What is it, really?
Okay, so let's get right into it. To truly understand money, we've got to look past the coins and bills. We need to get to the core idea, what it represents, and more importantly, what it does for us.
So, here's the official breakdown. Money isn't just one specific thing. It's more of a concept. And the key words here are any item and verifiable record. That means money can be a physical object, something you can hold, or it can just be an entry in a ledger. The only thing that truly matters is that we all agree to accept it as payment. It's all about collective belief. And here's a cool little bit of history for you. The word money itself comes from Juno Moneta, a Roman goddess. Why her? Well, because her temple was the site of Rome's very first mint. So you see, right from the very beginning, the idea of money has been tied to some kind of central, trusted place.
Now, for something to actually count as money, it has to do three specific jobs, and it has to do them well. First, it's a medium of exchange. That just means you can easily trade it for stuff. Second, it's a unit of account, so we can put a price on things. And third, it has to be a store of value, which means you can save it today and spend it tomorrow without it losing all its worth. And to really get why those three functions are so important, let's just imagine a world without money, a world that runs on barter. It sounds kind of simple, right? Trade what you have for what you want. But in reality, it was a complete mess.
You see, the giant headache with barter is something economists call the coincidence of wants. Just imagine you're a web developer and you want a cup of coffee. To get it, you can't just pay. You have to find a barista who just so happens to need a new website right now. Good luck with that. It's a logistical nightmare. Money, as that medium of exchange, just completely solves this. You build a website for anyone, get paid, and then you can buy coffee from any shop you want. Easy.
So how did our ancestors solve this problem? Well, they turned to things that had value in and of themselves, what we call commodity money. Way back in 3000 BC Mesopotamia, the shekel was actually a certain weight of barley. Over in China, they used these beautiful cowrie shells. And then we get a huge innovation around 650 BC in Lydia, that's modern-day Turkey, where they started stamping gold and silver coins, basically guaranteeing their weight and purity.
And using physical stuff, like gold, eventually led to a massive game-changing breakthrough. We slowly shifted from money that is valuable to money that just represents value. This is where the story gets really interesting. This is how we moved from gold to pure trust.
And this was the next logical step, representative money. I mean, think about it. Lugging around heavy bags of gold coins is not only inconvenient, it's pretty dangerous. So banks started issuing paper receipts that you could redeem for that gold. These notes, like the ones Marco Polo saw in China that just blew his mind, started to circulate as money themselves. The paper wasn't valuable, but the promise behind it was. For hundreds of years, this link to gold, the gold standard, was the anchor of the whole global financial system. But as economies grew and grew, the system came under enormous pressure. And it all came to a breaking point in one single, hugely important year, 1971.
In 1971, everything changed. The US government officially cut the dollar's last tie to gold, and just like that, the entire world entered the age of fiat money. Fiat is just Latin for let it be done, so the money in your account has value not because you can trade it for a lump of gold, but simply because the government says it does, and because we all believe that it does. It's backed by trust, and that's it.
Okay, so if our money isn't tied to gold anymore, where does it actually come from? Who makes it? Well, the answer is probably not what you think. In fact, it might be one of the most surprising and misunderstood things in all of economics.
So, in our modern world, there are basically two types of money. First, you've got central bank money. That's the physical cash, the notes and coins. But that's just a tiny, tiny fraction of all the money out there. The vast majority of it is commercial bank money. This is the digital money created by private banks, like the one you probably use. And how they create it? Well, that's the wild part. They create it by making loans.
So get this. When a bank gives you a loan, for a mortgage, a car, whatever, it doesn't just take money from someone else's savings account and give it to you. No way. It creates brand new digital money right then and there in your account with just a few keystrokes. Just think about that. They just type the numbers in. And as you can see here, that one activity is responsible for almost all the money that exists in our economy today. Wow. Okay, so we've gone from barley and shells to gold-backed paper to government decree, and now to digital money created by commercial banks. It's been quite a journey. So as we wrap things up, let's look at the timeless rules that any form of money, past, present, or future, has to follow to work. You see, no matter what it's made of, money has to have these 6 key traits. It's got to be durable so it doesn't fall apart. It has to be portable so you can carry it around. Divisible so you can make change. It needs to be fungible, which is a fancy way of saying any one unit is the same as any other. My dollar is the same as your dollar. And then the big 2. It has to be widely acceptable, and it has to be scarce or limited in supply. And that brings us right here to our final thought. The story of money has really been a story of abstraction, from a physical thing to a promise to pure information. When you look at that journey, from shells all the way to digital entries on a computer, what do you think the next chapter for money is going to look like?